The S&P 500 closing at another record high. Its sixth straight day of gains. Josh Schafer is here with the details. Josh,
another record high. Not bad, huh? Not bad if you're a stock market investor right now.
But if you're long the market, yeah.
If you're long the market, which I think a lot of people probably are, right? But people that are looking to get in is sort of what I've been asking strategists about this week, because I think right now can be maybe a scary time if you're an investor sitting on cash and you look at the S&P 500 at a record high and you're sort of wondering, well, if it's at a record high, why would I ever buy now? And there's been some interesting research out there. I spoke with Callie Cox over at eToro, and she pointed out that when you buy at a record high, you actually get a better return on average than if you buy on any other day over the course of the next year. And so basically what that's showing us is it really doesn't matter that much. I guess in some ways you're looking at 10.1% over the next 12 months versus 9.5%. So it's really not that big of a difference. I'm not saying that her recommendation is it's advantageous necessarily to buy now. But I think the other thing this chart speaks to too, and several strategists have pointed this out, when we're at record highs, it's not common for stocks to just fall off a cliff. We would sort of need some kind of black swan event, most people think, for us to go from a record high to, oh boy, the S&P is tanking, what is going on? You know, you need basically a pandemic-like event or something like that, a black swan event, to bring us significantly down. And one thing that I do think that bulls are sort of pointing to right now is the news that really kind of sent stocks higher to start the day today, the GDP print, right? And the other economic data we've had in July is continuing to show us an overall strong economy. Well, if we have a strong economy, that would probably be good for earnings in the long run, because it would be good for companies, because companies are growing and companies are making money. And we know, Josh, if earnings are growing, that's usually a good sign for stocks in the long run.